It is no secret that the cost of education in India and abroad is skyrocketing every year. Education loan is now the second largest contributor to consumer debt around the world, led only by home loans. After all, college is an investment and it's okay to take on a little debt to gain greater rewards down the road, right? Well, it might not be that simple. So, in today's video, let's figure out how can student loan actually impact your life. And we are doing a giveaway with this video of these 3 amazing books on personal finance. And all you need to do is like this video, subscribe to the channel, and tell me in the comments if you have taken any kind of loan ever, and if you faced any kind of challenge while making sure to pay back the amount on time. Winner announcement after 50 comments. You may not have the full picture of what a student loan may mean for your future. So before you decide to pull the trigger and go into debt for your degree, let's see some important factors that you should know about before taking a student loan. The interest rate on education loan varies between 6 to 16%. Usually, the public sector banks offer cheaper loans. For example, the SBI offers loan from 7 to 11%, whereas Axis Bank will give you the same loan, charging you 13 to 16% every year. The rate of interest is based on many factors, like the amount you have requested, the loan tenure, your or your co-borrower's future cash inflow, the loan repayment history of your co-borrowers, and so on. Apart from the interest rate, you may also have to pay a processing fees of up to 2%. The education loan usually covers your tuition fees, exam fees, library fees, travel charges, and other expenses for the educational projects. Most banks fund around 70 to 95% of the loan amount. You can get a loan amount of maximum up to 75 lakh rupees with the longest loan repayment tenure of 15 years. Also, do understand that the bank will not transfer the amount to the student's account directly, but it will transfer the amount to the institutions. Some banks may ask you for a collateral if the loan amount is bigger, but almost all banks will ask you for a guarantor or a co-applicant to make sure that if you are not able to repay the loan, there is somebody else who will take care of it. Now that you have an idea of the basics of education loan, let me give you a very important thumb rule. Make sure that you borrow less than your post-college starting salary. If your student loan at the time of graduation is less than your annual salary, then you will be able to pay back this loan within 10 years or early. But if that is not the case, then you will struggle to make the EMI payments and you may need to extend the period, which will increase your overall cost. Now let's discuss why should you be careful while taking an education loan. Number 1, student loan can be expensive. With any type of loan, you will always pay back more than you originally borrowed, thanks to the interest. Now, if you think that your loan repayment only starts after you complete the graduation, then this is one of the student loan myths. A lender might provide you the option of repayment once you get a job and start earning after college, but that does not mean that the bank will not charge you any interest up to graduation. While you are in college, most lenders will charge you a simple interest. When you graduate, this amount is compounded, and this will increase the total interest that you will pay over time. Student loan can hurt your debt to income ratio. Now, the debt to income ratio, as you know, is the percentage of your debt compared to your total income. Now, the more of your income that you spend on your debt repayment, the higher your debt to income ratio will be. Ideally, this ratio should be under 36%. If it goes higher, it could affect your ability to get another loan down the road. So for example, if you want to take a home loan, debt to income ratio is one of the most important eligibility criteria. It is probably no surprise then that as a result of student loan debt, many young graduates delay major life decisions like buying a home or getting married or saving for retirement. Do understand that the collateral for the education loan is your future earnings. If you took a car loan and if you fall behind on payments, the bank can simply repossess the car. But education loan works differently. After all, it's not like the bank can repossess your degree if you fall behind on payments. Instead, the collateral for the education loan is your future earnings. That means the bank is well within their rights to take the money directly from your paycheck. Now, if you don't make the payment on time, your loan account will become delinquent. Generally, there is a grace period of 15 days before the bank charges any kind of late fees to the borrowers. If the loan is late by 90 days, the bank will report this to the credit information bureaus. And that means your credit score will go down. And a missed payment on a student loan can actually drop your credit score by at least 90 points and hold down your credit score for up to 7 years. You see, the real issue is not the concept of student loans, but the reality of high interest rates and astronomically high college fees. But even if you know this truth, the reality is the student loan is an essential part of many students' lives. Without the student loan, a college degree would be out of reach for millions of students every year. So, what should you do if you have already taken an education loan? Well, if you have finished college and started earning, don't wait to make the repayment. This is the first loan that most individuals will take, and this will form a basis of your credit history. All future loans are dependent on how you make the repayment for this loan, as all the financial institutions will look at your previous record. If you have started repayment, don't default. If you have taken a 15-year loan, try to repay it within 8 years to get the tax benefit. What does that mean? The interest paid on education loan is allowed as a tax deduction from the total income under Section 80E. But this benefit is only available for 8 years. So, any bonus you get, any salary increment you get should ideally be used to pay back this loan. To make the repayment of the borrowed loan easier, the lender usually provides a moratorium period to the students, which is the course period plus 6 months or 12 months. This is the time period when you are not required to repay the loan. If the student has completed the course and found a job right after, the moratorium period is 6 months. If you have not found a job, the banks will give you full 12 months to find a job and start making the repayment. And do banks charge interest during this moratorium period? Well, yes. So, don't wait once you get the job to start making the repayment. If you're contemplating whether an education loan makes sense for you, or if you're wondering if the cost of education loan is worth it in the long run, honestly, the answer to these questions is highly dependent on your own scenario, on each person. All you can do is weigh the positives and the negatives, the advantages and the disadvantages, and make the decision that seems the best for you. So do what you can to minimize the student loan debt, and in the future, you will have to deal with less stress and be able to spend money on things that you actually choose. Hit the like button if you had fun watching this video. I'm waiting for all of you to participate in the giveaway. Wrapping it up, this Paritosh signing off.